Yes. What's going on? Let's try this again. Hope everybody's doing well. Instagram. Let me pull this up so I can see. Sometimes it doesn't want to play with you, man. Sometimes life pushes back against you. Plans don't go as planned. Obstacles, right? I'm sure you have those in your life. And you're gonna have them, man. That is for sure. And a lot of times that stuff comes at the worst time, man. Now, if you're earning money, my free ebook in the back, chapter 10, we talk about, let me see, did I pull it up over here? No, I gotta pull it, hold on just a second. I talk about the dogs of the Dow. Now, this strategy's been around like 50 years. Been a few crashes during that time, a few ups and a few downs, wars, rumors of wars. And on this page, I always keep a list of these stocks. Tuning in with a 2-year-old. Man, you know I'm prone to curse sometimes. Be careful. Jesus. Sorry, guys. I'm on a mobile setup here. These stocks, these 10 stocks, represent a piece of America. Now, no matter what troubles we go through, like we've seen Verizon in the news recently, right? They missed earnings. What else? We saw Chevron in the news. I mean, that shit's been going up, right? We saw Chevron in the news. What else do we see in the news? Let me pull up here. I had wanted to show you this. I had to log out. My fucking mic was echoing, which means I couldn't, and then it messed up my whole vibe. But I want to pull this up and show it to you so I get my vibe back. We'll put it, let's put it right here. Now, right here, chapter 10. Let's pull it up. Now, here's what's important. Now, I'm always saying, markets go up, markets go down, man. That's what they do. They go through the 4 stages, and that's what we're going to talk about. But if you go back and look, now look at this list. This is from 2014. 2014. That's about, 8 years ago, if I did my math right. Now, in 8 years, there's been a lot of troubles, man. There's been some run-ups, some run-downs, some presidential shake-ups, some all kinds of shit has gone down in the last 8 years. Now, do you recognize any of these stocks? AT&T, you know that one, right? You know Verizon. What about Chevron? Know that one? McDonald's, Pfizer, GE, Merck, Caterpillar, Exxon, Coca-Cola. Now, the basis of this strategy, now don't misunderstand it, I use the money flow on it. But as I came across reading, studying and looking, I'm like, God damn, this is a no-brainer. Like these things here, they're always around, right? And so as I began to watch and became to realize that the way stocks moved was in 4 stages, meaning I could look at a chart and see. Now, does that mean I know the direction? No, it's not what it means. It means they move, they float on the chart like this. And so as things go bad, it goes down. And then when they get too far down, they tend to go sideways. And if things are still bad, they keep going down more, right? But what I began to determine or look at is bottoms and tops would look the same. And they say, we can't pick bottoms and tops. Okay. You can pick all of them. Meaning if they all ended up ultimately having a similar pattern, if you could make a value call on that pattern and you would just wait for it and you go, yeah, maybe it's not, but if it is, that's what it looks like. And that's how I began to put this together. And the guy that I learned the basics from is a guy named Stan Weinstein. Stan Weinstein did the 4 stages. Prior to that, most people believe the market moved in 3, sideways, up, or down. And that does explain all movements, sideways, up, or down. And Stan said, yeah, but a better way of looking at it is it's sideways, up, sideways, most of the time down, and then sideways, and then back up. And that over time, they would go higher. You say, well, how do you know? Well, here's these stocks in 2014. And these are the prices. Now, check this out. What is the price of Exxon right there? $92. Right? $92, 2014. You say, well, how do I know you're telling the truth, Gerald? Well, we could come over here, put Exxon in, back it up. Let's go to a monthly chart, make this simple. How far back can we go? Where's 2014? Take it out. Now let's take it over. Whoa, 72. Stack charts must be subtracting out stock splits. Yeah. Now, stock splits are going to throw off sometimes some of your actual chart numbers. You'll look back and see it and you'll be like, what the fuck? Wasn't even that price. When they do those readjustments or splits and whatnot, it can throw that off. Especially if you go look at like triple leverage funds, it'll say it was $5,000. It wasn't. So as we look at these stocks, GE, Merck, Caterpillar, Exxon, right? One thing we can notice is that if you watch price, look at price on this. Let's go to a weekly. What do you see? You see big booms down, right? Look, massive moves down. And then what? Massive moves up. Right? Massive moves up. And this is just looking at this here. And so these are cycles, man. And in the book, I talk about business cycles being, 5 to 7 years. They're probably faster now, meaning it takes time, man. There's shit that happened in COVID that's just now rippling through the economy, or the result of all the money printing, or what's caused inflation. These things take time to ripple through. And so what tends to be happening today tends to keep happening. And it just keeps happening, down, down, or up, and it just keeps happening until what? At some point, we run out of sellers, we run out of buyers. And then at some point, it stops. And that's what I became obsessed with, as I would watch. Could I find zones where it looked like it had stopped? Was there a visual way? Were there indicators of some sort, like a flashing light? Was there some way of telling value of these stocks? Mostly started with these. Of an AT&T that throws off a dividend, was there a better time to buy it than another time? Meaning, if I'm staying with it, if I've got a big chunk of it, if I'm going to hold it all year, is there a time that could tell me, hey, it's on sale right now, or hey, it's overpriced right now? And it doesn't even have to be perfect. It just needs to give me an indication. And if I could do it each time, and if over time, because look, this 2014, these stocks are still here. They didn't go anywhere. They didn't go anywhere. No matter what Fox News or anybody else said, they all stayed here, kept paying dividends. Caterpillar goes up, and then it goes down, and then it goes up, and then it goes down. And it just keeps doing that, man. Pfizer, look at, these are massive companies. So what the dog strategy did for people is it sorted and selected. Meaning it helped pick things that just win over time. Meaning these companies they just stay around. They ride the, times are bad, they let people go. And then they add people. That's how it works, man. And they just ride along throwing off these dividends since 2014. Here you go. Money, 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 money. No matter what's happening there, they just keep giving you money, money, money. Every once in a while, one of them may run into trouble. AT&T came off the list. Right? The Dow strategy takes top companies, sorts them for you, and then gives you a list of 10 that are the most undervalued that pay the highest drip. So just sit and think on that. It's so simple, most people can't comprehend it. It's too simple. They can't get their brain behind it. You mean there's a sorting selection thing that's been going on for 50 years? Yeah, absolutely. You can come over here, you can go to the website, and you can read all about it, the returns. Now, it's going to somewhat track the market. Sometimes it's going to beat it. Sometimes it's not. That's just the way that goes. Let me see something. Now, look at that. You're like, in 2006 they were doing this, Gerald? Yep. In 2007 they were doing this, Gerald? I was only 12 years old. I know. Look. In 7, and then look in 8. Look. It was down 50%. 2008 it was down 50%. Now, every stock in there paid a dividend. Oh, here's 2016. They were doing it in 2016, Gerald? Yeah. You think they'll be doing it after I'm gone? Yeah. So if you look, see any familiar names? We got some new ones, though. IBM's on the list this year. Boeing's on the list this year. Intel's on the list this year. What do you mean? I mean, those stocks they sold off the most. Because the only way to get on this list is to have the highest yield. And the ones with the highest yield, meaning the dividend, the yield is higher. The lower the stock goes, the higher the yield for anybody new buying it. So if you come over here, and I'm just big picture looking at it. Let's say up here, let's close this down. Now, this is how you're going to use the money flow to gather money. If right here, Exxon was paying a $1, I'm just making up a number, $1 a share dividend, and then it fell to here, and this guy could buy it for 27. This guy bought it for 60. And then I go, hey, I'd like to get that $1 dividend too. I only paid $27. You paid 60. We're both getting $1. You got what you agreed to. I got what I agreed to. What's the difference? I bought it when it was on sale, right? Now, if as a general rule, if I'm wanting to add to my holdings, my internet must be moving slow. If I'm wanting to add to my holdings, does it make sense if I could see maybe what these look like? Technical indicators, and I could somehow value these things. And if I just wanted to be a person that accumulated like that, right? What could that afford me? Well, maybe when it runs up, I could take a little bit of this off to buy something else, keeping my core holding. Meaning, as I look at these, I could pick the ones that I think are going to do the best, going to do or that are most undervalued. And thereby, at some point, being that this is contrarian, meaning that over time it's going to correct itself and it's going to go, what? Higher. This is... Give me a second, man. Trying to do my internet is moving slow. Just checking it real quick. I get all these little signals, man. It drives you crazy. It's like trying to run a one-man fucking radio show. All right. This list, chapter 10 of the free ebook, is available on the website Dogs of the Dow. So when I'm started looking at these, what I decided to do, this is years ago, that about 75% of the money that I have in the stock market would be held in dividend stocks, business development companies, REITs, right? In the back of the book, you see I talk about REITs. There's hospital REITs. There's all kinds of REITs, okay? I own probably 4 or 5 REITs. And then there's mortgage-backed securities, right? There's just plain old vanilla dividend stocks. And that's what this is. That's what the dogs is. What the dog does, though, is it sorts them. It keeps you from, it's trying to give you a list of the ones that'll produce the highest dividend return for your money that meet the criteria to be in the Dow Jones. Meaning they can pay this dividend. Now, have stocks not paid? Sure. That's happened over the years. Not many. You know, there's a few that have cut it off. That's happened. Those are usually during But listen, if you're holding assets through a recession, through a declining economy, through business restructuring, you're going to take hits, man. You're supposed to. You're not a unicorn. Everyone does. In 2008, everybody gets hit. Okay? It's just how do you weather it? Does the hit become ultimately an opportunity, or does the hit take you out? Right? It's not about avoiding the hit. You can't avoid things, man. You're not going to tiptoe through it and get away from it. You're not going to live some life where, oh no, mine never go down. That's not how it works, man. So, where do we have that site? The dog site go. (2016). I thought we pulled up the site. Oh, that's right. I took it down. Let's pull this up. They got so many goddamn ads now. Never mind, man. They got it fucked up. They put so many ads on that site now, it makes it hard to fucking use. These stocks go up and down, okay? And they're going to go up and down with the economy. And some are going to get out of favor. And the further they get out of favor, the better the potential return down the road, assuming that it meets a base. So look at Merck, right? If we take Merck back, when it first started hitting the Dow list, we go back on a weekly, it's back over in here. $68, $70. Now we're at $88. So if we come over here and we look, what does Morningstar think Merck is worth? Fairly valued. They got the stock fairly valued. You go to tip ranks, you get the same things, fairly valued. Now, if you notice, what? This stock has basically been going up, right? The market's going down, it's going up. The dogs picked it up when it was down, meaning way lower. That's when it hits the dog list. And so it gives you a selection of candidates that pay money that have fallen out of favor, right? And so now you have what? A sorting and selecting system. So you start tracking these. And as they come in, now the basic strategy is you put 10,000 bucks, 20,000, 100,000, whatever the amount is, equally divided among the 10. You do it January 1st. Okay, that's one way. But if you know the money flow, there's another way. Meaning I can watch them and implement that money as they set up, right? So if this was on the, I doubt, is this on the list this year? Yeah, it might have been in the beginning of the year, right? So now this stock is hit what? True value. I want to trim it. That's not in the strategy. Take some off on a stage 3. Looks like a stage 3, right? Kind of moves in the pattern, don't you think? Not perfect. I'm quick drawing, but sideways, up, sideways, down, sideways, what? Up. So the money flow lets us what? Stay in the flow of the 4 stages. Doesn't necessarily mean you need to do something, but it can watch price each day. And last week I was talking on the whiteboard about, is one day valuable? Does one day in the stock market really mean anything? One day, does it fucking matter in 10 years? Over 10 years, will you even remember this day? I bet I could ask you last Thursday at 4 o'clock. You have no idea. You don't know what happened 2 weeks ago or 3 weeks ago, or if I said 6 weeks ago on this day, what happened? I don't know. Of course you don't. Because one day doesn't matter. It's the accumulation of days that builds the patterns that sets up the thing, right? And so each day, if we look at a moving averages, right? These are averages. It smooths the bars of days because one day doesn't matter. It's the accumulation of one day. And if you skip working out one day, it doesn't matter. If you do it over an accumulative period, it starts to matter. It's the compound effect. And this is how you get fucking rich. Excuse my language for the 2-year-old. So 2-year-old, this is how you get rich. You do the same thing over and over and over. And you don't do one thing over and over and over. Right? That's it. The compound effect. It's how you become good at piano. It's how you become good at marketing. It's how you become a good salesman or a good realtor or a bartender or a bus driver. Repetition. Wanting it. Desire. Deciding. Picking yourself. Voting for you. And that's what this is, man. The Dow... The dogs of the Dow is about building life, long-time life wealth. The hard part is, do you have the human ability to even keep it if you get it? Most people can't keep the shares they get because something happens to them that forces them, either through their own mental weakness, their own financial weakness, or circumstances of life steals it. And it's gone. And they don't get to look back at a list. It says 2015. Remember when we were adding IBM? No, they don't have IBM anymore. 7 years later, they don't own it. And that's the biggest problem. That's the biggest issue you're going to have. It's not this. I could teach a 4-year-old how to pick stage 1s and buy a stock. Like, that's easy, man. The pattern on the charts is easy. If you still have a problem with that, you just choose to be ignorant. You're just like, I don't want to know. Because it's super simple. This is simple. All you have to do to know the value of a company, you go to a reasonably ranked fund place and you put it in up here. And they'll give you the price. They'll tell you what it's worth. And if you were to bounce that off of a list of stocks that have been sorted by a strategy for 50 years, has shown up every day, even when you didn't. And so when you didn't look at the market, Exxon did. It printed a chart. Right? And there's people that'll let this go by and they don't look at it on Monday. So on Monday, they're not looking at oil. Guess what they don't have? Oil stocks. They're looking at shit that's going to cause them to lose these oil stocks most of the time. That much gathers more is true in every plane of existence, and that loss leads to greater loss is equally true. Mind is creative, and conditions, environment, all experiences in life are the result of our habitual and predominant mental attitude. The attitude of mind necessarily depends upon what we think. Therefore, the secret of all power, all achievement, and all possession depends upon our method of thinking. So one of the major tenets of the money flow, and it's non-negotiable, right? I don't care what anybody else says, that 70% of the time, I rate 71 here, it could be 68, could be 90, 72 this year. It floats. Stocks go up. And that's indisputable. You can't, I don't care what you say. That's true. Right? So if you back this up and I go to the SPY and I go to a monthly chart, right? Back it up. Most of the time, they're going higher. So just go all the way back to 1850, pull up charts, and you'll see they're going higher with periods where they come down. Okay? That's called history. That supersedes anything you think. It's called history. It's what it's done the whole time. Now, every generation has people that think this is it. Zombie land. All right, well, whatever. I'm just going off history, and if that happens, I'm fucked anyway. It doesn't matter. So I choose to be positive. And so I believe there's a pattern you can see in price, that it moves in 4 stages. And it moves up, and it's based on the emotions of millions of people who get up every day. Half those people who get up every day to look don't know shit. Barely spent any time. They're just clicking buttons on an app. This is who we're competing against. Right? When you're competing against people that at this first sign of thing will sell shit, it's not that hard to beat them over time. You know that, right? It's easy, man. It is easy. It's easy. So, sideways up, sideways down. Now what? What are we doing? Going sideways. What do I expect? It to go up. It might not. Might break down. We'll see. People say, what do you think is going to happen? I think this is going to happen. Right here. And when you say, what are you going to do? What I did yesterday. I'm going to watch it. If I have money to allocate, I'm going to allocate. If I got stocks that are overvalued, I'm going to trim some so that I can allocate them into better upside over time. Like, that's how you manage. If you have shit that pays you money, assets, and money's coming in, that's your goal. Minimize cost, watch, wait. It's not, now, if you need to raise capital, yeah, you could sell something that makes you sleep better. Like, but the goal, the goal on these, where are we at? On this, if you have this from the dogs, the goal of this isn't to own less of this. The goal of this over the years is that you have more Chevron, more AT&T, more Verizon, more Pfizer, more Merck, more Exxon, more like your goal is accumulation, more and more and more. Why? That much gathers more is true on every plane in existence, and that loss leads to greater loss is equally true. So as you accumulate, more accumulation gets easier because what you accumulated provides more accumulation, right? If the more you do push-ups, the easier it gets to do push-ups. The more you walk, the easier it gets to walk. More accumulates more. So the more you come into the market and the more shares you buy and the more you look at this and the more it's part of your life, the more you get. It's how you get houses. You know how you get 10 houses? Get 5. Once you got 5, it's easier to get to 10. You know how you get 20? Get 10. But you know how you get 3? Get 1. Like, it's just a pattern, man. Let's see. Now, what am I trying to do by targeting these? I'm trying to increase my compounding effect. The dividend game is about this. Increasing compound effect. Let me say it again. The dividend game is about increasing the compound effect. Meaning, can I juice it? Can I see when something's overvalued, use my intelligence, and add it to things that are undervalued that pay a higher yield? Could I take gains from one that I got right? Let's take a Merck, right? If basically everyone agrees this is fair value now, it's not really a deal, pays a nice dividend, I've made a nice chunk of money, right? Because we were buying it a lot lower. I think it's even in the book. Let me see. Yeah. So Merck's been in and out of the dog list. It was $56 here in 2014. Now what are we at? What is this? $88. Now add in all those dividends. Add in these stage ones and the trims. You go, what do you mean, trims? Yeah, man. What if we trim over here? Right? What if you did that? What if you took down 10, 15% of it? You're like, oh, man, you wouldn't have known that. I know. It'd be crazy. How would you ever figure it out? And yet, every time it looks the same on a chart, man. Looks the same. Right? Same pattern. Now, what I want to do is, as I learn the pattern of the 4 stages of price movement, I want to apply that over my brain, my logic, right? And I want to be able at times to make assessments and go, well, if something's overvalued and it's run up and it's extreme, that seems like a good time to take some off. And I could take this, and then I could go back to this list, right? If I was tracking these 5, watch this. Where are they at? Come on, man, work with me, man. If I was tracking these 10, small dogs is 5. You can do this with 5. You can do it with 5, man. 5 stocks. And they're going to pay you. No stops needed. We're not getting out. We're getting in. We might trim, but we're not getting out of the position, right? So as this runs up, I could go to the list and go, okay, I took some off of Merck. What's on sale? What was my dividend yield on Merck? Like 3.4, right? Well, shit. Verizon's at a 5. Boom. Verizon looks the exact opposite. Are you saying, Gerald, we could use our... Yeah. So this is the exact opposite of what we just saw in Merck. And you're like, well, I don't have any money to add to my account. Well, right now you don't need to. Right now you need to trim a little and take the gains that you made on the other one and move it over, man. And you say, how much? Well, you can figure that out. Whatever works for you. Could just be a little, could be 5%, whatever, man. Whatever. How convicted are you? Feel like it's overpriced? Do you feel like Exxon's topping out? Maybe you take 10, 20 off. Shit, it might be 2 years before you get back to it. What do you mean? It might hang around, run up a little, run down a little, never. It just stays fair value for 6 months, and then it runs, it's really overvalued. Then it comes crashing down. Well, all that took 9 months. In the meantime, you're over here in Verizon, the new money you put in ran up and gets back up in here in the 55, and they say, hey, it's fair valued now. And you're like, oh, really? Man, now that I'm up in that, why don't I trim that? Might be time to go back to Exxon. I haven't gotten out of either. I'm just waiting, right? I'm using the skills of trading to lay it over the movement of price through the cycles of what? Of the business cycle. A lot of this shit is affected by different things, right? Now, we said the stock market, everyone's like, well, the market's going down. Not for everything, it's not. Not everything's in a stage 4 decline, guys. Not everything. There's plenty of stocks that pay dividends going up, 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 up. Up. So this is why we need this is why we need these, man. You need different assets and different things, okay? You do. This makes it easier to ride out Bitcoin. If you got a bunch of dividend stocks, riding out Bitcoin's a little bit easier on your mind than if you were all in on Bitcoin, right? This makes riding out growth stocks a little bit easier if you got money going up in, say, what is you say, which ones? I don't know. Go look at your house. I bet you got some Campbell's soup in there. Now, when were we buying Campbell's soup? Like 2 years ago? Because it was dirt cheap. And it paid a dividend. So the money flow is not restricted to just the 10 stocks of the Dow, but I watch them because the Dow is a sorting and selecting process. The dogs of the Dow is for me. It's there to help me. So I keep an eye on it. And you can go to the website and hit current doggishness. It calculates it in real time, not year to year. And so you can watch as the Dow moves up and down. Not all stocks in the Dow are going down. Not all stocks in the Qs are going down. There's always, you've heard Kramer say it's a bull market somewhere. Right now is a bull market in these consumer staple foods. You're like, what do you mean? Kellogg's. Look at Kellogg's. That ain't going down. Straight up. Kellogg's to the moon. Kellogg's to the moon. What about Kellogg's? Are we not doing Kellogg's? Right? Everybody just wants to talk about Netflix. Well, this goes up. Now, when would you have bought this? Stage 1s, man. The great thing about these is you have your whole life. You can just accumulate your whole life. I'm not selling them. I'm buying them, man. Stage 1s. And I just keep this going back. Year after year. How many you got? Well, you ain't got to buy that many. You could buy 1 share, 2 share. You're just constantly investing money. Or when you trim Merck, you buy 2 of these and 1 of those. And then you add, and this just keeps playing out over and over and over going forward. I mean, this is what I've done My whole life, as I have money, I put it in and I buy shit. It's a stage one. And at some point, these big companies run up. Now let's go see what is Kellogg's worth. Let's see what Morningstar says. Wow, man. They still say it's trading at a 16% discount. Damn. That changes how much we might trim. Listen up. Lesson. If the stock is ripping and it's in your, pays you a dividend, it's in your buy and hold, it's in your whatever you want to position, trade, these dividend stocks, however you're running them, this is still undervalued, man. Now, that don't mean I might not trim, because it could still pull back and still be undervalued. What do you mean? We could pull back 5% here and be 20% undervalued, right? But I got to respect what I'm seeing. It's moving up, man. So if I wanted to add some, maybe I don't have any money, but maybe I could trim a little here and roll that into what? I don't know. What we could roll it into? We go look at 3M. That's on the list, right? Ooh, it's come way down. Way below the 200. Right? Or we could do what? Nothing. You could do nothing. You're not obligated to do anything. What the money flow is trying to help you with is help you with that decision if that's your plan. If your plan is to trim stocks as they become overvalued, and your plan is to add to things as they become undervalued, what this gives is it takes all the chaos of the day-to-day movement of price and the noise in the news, and if you believe that over time prices go up and you hold to that, then what this gives you is a logical way to do that, besides just, I don't know, gut or whim. Not to say you don't use your gut or whim, not to say you don't call an audible from time to time, right? But the news doesn't get to form my opinion. The fact that everyone else thinks we're going in a recession, maybe you're all wrong. If everyone I know thinks we're going to do something, hey guys, that's not usually how it works. It's not usually so fucking obvious. And everyone I talk to is gloomy, which tells me you're probably wrong. Because you don't all get to agree and it be true. It might for a minute, but not over time. I promise you, in 5 years from now, there'll be a kid listening to my teaching and I'll be like, in 2022, when I was trimming Campbell's and I started buying blah, blah, and now look at it. I'll be having that conversation. And there'll be people, Gerald, I bought your book and stayed with it for a little while and then I quit. And now it's 7 years later, I'd like to get back into this stock thing. I get that a lot. I met you 5 years ago, Gerald, and you were telling me to buy stocks. I wish I'd have listened to you then. Gerald, 5 years ago, you were telling me to buy real estate, and I really thought it was at the top, and I didn't want to buy any because I really felt like prices might go down. And I know you said it doesn't matter, just buy and rent and collect rent. Dude, my whole life I've been hearing that. Since I've been teaching this to people. All my life I've been hearing, yeah, blah, 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 blah. My whole life, that's what I've heard. Literally. Serious. For 20 years, I've heard why everything's fucked. We're all never going to recover. Prices are way too high, and they just keep going higher. So 10 years ago, people in California told me prices are crazy. They're crazier now. Right? People are like, well, gas is $10. Nobody's going to drive. Yeah, they will. They'll just pay it. They won't buy something else. And life will just continue on. And you could choose to collect dividends or not collect dividends. You could take advantage of Netflix being down, or you could not. I mean, these choices become ours, right? Make sure you're making them with a wise mind, man. Wise mind. Appreciate you on Instagram. I'm going to stay on YouTube, take some stock charts, and maybe talk for a second. Appreciate you guys on Instagram for listening. Let's get rid of those guys. Instagram took down my account. Just really messed me up. Really sucks. And to take it down, no fault of my own, is the other part that pisses me off the most. They took it down for me impersonating me. That I was a fake Peter's account. So that's nice. Let's see. Good morning, Gerald. Yeah, man, keep an eye on these dogs. And times like this is when it's important. And you see the value probably of having them. And it's something you can just have in your back pocket. If you build that out, man, you get that to over time. Yeah, my man said hit the like button. That would be nice. Over time, that asset's going to grow for you, man. And you don't have to be, freaked out about it or consumed about it. You can just check in on your charts. That strategy, you don't even have to check charts, if we're just being honest. Like, you don't even need to. That's unfortunate because the charts can help you greatly. I really do believe charts can add value in the sense that the thing that the money flow brings is just order out of chaos, order out of everything that's happening, and what those type of stocks, dividends, and REITs, and those things that provide a drip. And the reason we want to be like 75% in things that drip us is so that when times are bad, we're getting drips, and growth is great when it's going up. The moment it turns down, people lose their faith in it. The thing about dividend stocks is you can just keep your faith in it forever. Like, you don't have to lose it, meaning it's actually worked always. Nobody can disagree with that. Plenty of stocks in 2008 cut their dividend or maybe didn't pay. But guess what? The ones that were doing it put it back on and then begin to raise it. And you see where banks stopped. And then if you stayed with banks, if you held your bank stocks, if you accumulated, some Bank of America here and Citi there and JP Morgan there on stage ones, or you bought the XLF, if you just did that and you wrote it out and you just kept adding, you didn't even have to add. But if you did, it multiplied the compound effect. Especially if they stop the dividend. If they stop the dividend, you really have to, because as you do that, it's I don't call it like martingale, whatever they call it in betting. As you bring down your price point, how much you need to get back up becomes down, man. And that's not a winning strategy, but that is part of a value-based strategy. Some people may say catch a falling knife. Well, what we're trying to do with the money flow is avoid that accident, that process. Yeah, we don't want to catch a falling knife, but I do want to buy bottoms. And I do just need to understand that part of buying bottoms is the possibility that it's not the bottom. Like, you can just look on this bond chart, right? Where it looked like these were bottoms and it kept going. So, do I get out? Well, I don't have to be a forced seller. Like, dude, I've been in the market 21 years. I'm not stupid. I know what's going to happen. Bonds are coming back. Like, all my life, these things have worked. Every time oil crash, every time everything was written off, it almost always comes back. And so you have that part of history. And does it take time? Could it be bad? Yeah, that's why we diversify. That's why we own lots of shit. Guys, Bitcoin could go to 10,000. If it does, a lot of people are fucked. We're on margin, right? That could happen. And the more people that are fucked, the further down it goes. When loss leads to greater loss and gain leads to greater gain. And the market is a clear example of that philosophy. This book, The Master Key, was written so long ago, and it jives and flows with being an investor more than any mindset book. That much gathers more is true on every plane of existence, and that loss leads to greater loss is equally true. Meaning what is happening is probably going to keep happening. And all we're looking for is when it seems to have stopped. That's what a stage one is. Trying to buy what seems to have stopped. Now, if you're a short-term trader, that should trigger you too, because now you get a shot at your swing trade. Swing trading is about getting in and getting out, right? And you can do that, but that's not investing. So these are two different things. You got to have a different hat, put it in a different account, approach it differently with different set of operations, different set of rules, right? So when we're flipping a house, that's not the same as me buying and holding a portfolio of homes that I rent to people. Whole different set of shit we're doing. Over here, we don't have leases. Over here, we do. Over here, we have to meet minimum standards to sell. But over here, we got to meet minimum standards to rent. Maybe have permitting, bookkeeping, right? A lot more things that are involved. But flipping a house could involve a lot more shit too. Hands-on, going to store, buying things, putting in a lot of management, right? Same in stocks. Different assets require different thought processes, time frames, and strategies to approaching them. And you got to define what is your Bitcoin strategy for you and your family. What is your fucking investing strategy for you and your family? If I said write it on a piece of paper and explain to me how you're building wealth for your family, write it right here and explain it. Now, like that's what the money flow is about, right? It's just a way for me to spot what I think are potential bottoms because the pattern set up like all bottoms does, right? And I would highly encourage you at your house to begin to think of yourself as an investment fund. We make money doing X, Y, Z. We pay our bills of operation, like we got to stay alive. What is left? We need a certain amount in savings to protect us from the world. And once we do that, we move to the investing thing, right? And the stronger we can make that bucket system, the better we're going to be able to withstand the pains and troubles and trials that will come your way. I promise you, you will have storms, and everyone around you may be doing great, and your world falls apart. And if you don't have the savings point component and you don't have the debt-free component, when that happens, it tends to always happen when the market's going down, in my experience. When shit rains, it rains, right? And that causes the way you handle things differently, right? It's not fun me watching my dividend collapse during COVID and dividends being cut, right? That's not cool. But looking back now, what was the play? Hold the line, keep the faith, follow the mandate. We already decided it. So we're not making these decisions in the midst of trials and troubles. We're making them now so that when they come, we know what to do. It's called a strategy, a system, whatever you want to call it, a philosophy. And you put yourself on that, man, and then you stay focused. And when those times come, you can laugh at the people that are freaked out around you because you already have a plan, man. Hope you guys have a great Sunday. Anything I can do to help, just let me know, man. I appreciate you.